can happen.
You're right. Absolutely. Anything could happen because we certainly didn't know this latest geopolitical conflict would happen. We'll leave our conversation there for now. That's Brandon Clark. Vornova. Morning Movers will be right back.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Welcome back to Morning Movers. Time now for the economy check. For that, I'm joined by Alex Coffey, co-host of Next Gen Investing, to help preview the week ahead. Alex, welcome back. It's so good to have you back in the fold here. Hope you had a wonderful time off. Let's get into it. You came back into all this volatility in markets. We've got a good calendar for the week ahead. What's on your radar this week?
Yeah, a couple things. Good morning to you, Diane. Happy Monday. You know, all things considered, I think being away and coming back, you also kind of see the forest through the trees. I mean, the S&Ps are still only like 5% or so from all-time highs. I think it's closer to 7% maybe or so for the NASDAQ based on some of my numbers earlier. It's been a sell-off, but it's not been a crash by any stretch. Clearly the story is what's going on in the Middle East. You and your previous guests were discussing that, of course, at length. And everything this week, I think, is going to begin and end with those headlines because the story for markets right now is oil and the supply shock that you're seeing driving tremendous volatility in arguably the most important commodity that there is. So, you know, it becomes almost a more simple market for the short term, despite the fact that sort of the reasons behind it are very complex and high stakes.
Yeah,
so for now, volatility in oil, I think, is driving the ship.
This is
I
how
think
we
you're
get
right
over
about that, and that was, you know, kind of the theme last week, that it was really that headline risk that set the tone for the markets. Outside of the jobs report on Friday, that added, though, to the, you know, kind of downbeat sentiment and risk-off tone that we saw. In terms of the economic calendar, I noticed we have CPI coming up this week. What else is on your radar, and what matters the most on that front, on the economic front?
Yeah, that's a good question, especially given the weakness that you saw out of the labor market report that really, I think, threw more kind of uncertainty into the fold. You go back a few more weeks too, Diane. Of course, you had those writings around what AI might do to the labor market. I don't think showing a negative jobs growth figure or job loss, if we're just going to call it what it is, helped quell those fears either. Combine that with the geopolitical risk, it's certainly a recipe for a higher volatility environment. We find ourselves in that. As far as this week's concerned, you mentioned CPI. Now, of course, we're looking backwards to February numbers. It's not going to, have what's going on in real time impacted in that, but you're going to see sort of the baseline. Now, where things get, I think, interesting and complex is you got to spend money on energy, right? The reason it's stripped out of the core prices is whether or not the Fed raises or lowers interest rates, it's not going to pull more oil out of the ground, especially when you have a supply shortage-driven spike in something like oil. It's going to have inflationary near-term impact in terms of how much money consumers are going to spend on energy, but it's going to have deflationary effects to the economy, meaning it's going to stifle economic activity. It's an expense that you have to spend on, and suddenly now it costs a little bit more than you were planning, and it happens so rapidly. So CPI is going to be important for sure, but also you look out throughout the rest of the week, you're going to get a personal incomes and spending number alongside PCE at the end of the week. I think that's going to be really critical. And then as long as we're going to be in this sort of uncertain labor market environment, every week jobless claims are going to be an appointment viewing. Even if they aren't headline making, most of the time there's a chance they do, and you have to pay attention to that.
Okay, and another story that I know you're across, GE Vernova, it is getting more conviction from the sell side with double upgrade this morning. Tell us the details here. Yeah,
Rothschild coming out and double upgrading GE Vernova. They flipped from a sell rating to a buy rating. Massive price target adjustment, basically doubling from where they were before. They were at $560 a share for their price target. They're now at $1,100 a share, Diane. They say that the power and utilities demand and the margins for new equipment and service are far stronger than they had anticipated and expected. And they now expect sharp upgrades to guidance, not only for GE Vernova, but also for Siemens Energy at the end of this year and probably for 2027 as well. Now, with the volatility you're seeing in the overall market, you're not seeing the typical double upgrade reaction for GEV shares, but it's down, less than 1% or right around 1%, kind of in line with the overall market, which I think then goes and kind of ties things back to how I began, which is oil volatility is driving the ship right now. So your micro stories, they're important, especially for the longer term, but near-term volatility is a macro-driven story right now, Diane.
That's what I thought in the context of this, because listen, I mean, GE Vernova has had a strong run. There are, multiple analysts who are bullish on this one, even with the strong run it's had. But again, that headline risk is top of mind right now when you look across markets. Thank you, Alex, and welcome back again. That's Alex Coffey, co-host of NextGen and senior equities contributor. Coming up, we'll take a look into the recent shifts in private markets and how private investing is becoming more accessible to retail investors. That's next on Morning Movers.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches.
Wow, I can impress two. That's crazy.
helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com. Welcome back to Morning Movers. I'm Diane King Hall, coming to you live from the floor of the New York Stock Exchange. In a market belabored by volatility, we are looking at the world of private investing and how private markets are becoming more accessible. For that conversation, we want to welcome in Mitchell Kaplan, CEO of Willow Wealth, joining us here at the big board. Mitch, it's good to see you.
Thanks for having me.
It feels like investors are looking for opportunities, especially when you think about, one, the volatility of public markets recently.
Yep.
And before that, we were seeing this rise in interest in private markets. So talk to us about what investors are looking for, especially the high net worth investors that you deal with now.
Yeah, I think really what they want is exposure to creating a truly diversified portfolio. And they're so used to having been trained around diversification in the public markets and build out a truly diversified portfolio. And I think they're coming to realize that without access to private markets, they haven't really built a truly diversified portfolio.
Let me ask you this, though. There are hurdles when it comes to private markets. Time is one of those high minimums. So when you think about that, what's changing to make those investments more accessible now?
Well, Willow Wealth really began over 10 years ago. And the whole idea was to do exactly what you're deciding, democratize or create access. And so we built the system so that the access point could be $10,000, not $500,000 or $750,000. So it was really creating accessibility as a point that made sense for investors.
Risk comes to mind when I hear that, though. Not just the amount, it's fine, right? It gives an opportunity for, those who, entrance, exactly, maybe who are high net worth but are scared, skittish, and want to, deploy some capital, or someone who may be, aspirational, right? But what are the risks? Because I think about transparency, and obviously in public markets there is more, and certainly should be more transparency. But that's a concern that comes to mind.
For sure.
How do you think about that?
For sure. It's interesting. So, as you may know, I started what was the first branchless bank, became the first internet bank in the United States 20, 30 years ago, and merged it into E-Trade. And then I ran E-Trade as CEO for many years, and we thought about the same things when you were really democratizing access to trading. It was the same basic principle. And what we learned, and what I think we're really focused on at Willow, is education is a thing that matters. Like, at the end of the day, it isn't access, it's really informing and educating a consumer so that they understand the choices they're making. They understand the trade-off between liquidity and return. And ultimately, if you really put that information in the hands of a sophisticated investor, I think they can make excellent choices.
And then for those sophisticated investors, or those who are learning to become sophisticated, what are the worries that come to mind about when you think about private credit recently?
Yep. So for one thing, you get to my point in terms of really sort of age and experience, and you realize time matters. And you have to sort of stay focused on the long term. And particularly when you're investing in private markets, you realize that, to your point, a lot of it is illiquid, although there has been the creation of many interval funds to create some liquidity. But the idea, I think, is just that you really want people to think over the long term. And if you educate them in that way, then I think the volatility becomes less of an issue in private markets than it does in public markets.
So it becomes less. Why does it become less of an issue?
Because you know that you've exchanged time for return. Right? In the public markets, I think people sort of react to the volatility we're seeing today. In the private markets, I think you say, I've invested for a 1 year, a 3 year, a 5 year duration, so this is noise that's happening in the short term, and is it really still accomplishing my long-term goal of building out diversification?
Does that noise ever impact the kind of typical client base? Because it feels like, because they're, obviously long-term investors in public markets as well, and that noise can affect, how investors view their holdings. Because I mean, it's major volatility, and when you think about war, we don't know how long it's going to last.
Exactly, I agree. And I think an interesting way to, or perspective would be that rather than thinking about the existing investments, they think about the next investment they're going to make. And so what you will see is during periods of volatility, people may look for private market assets that's shorter duration, more of a coupon based. So it's more debt instruments than it is equity-like instruments.
Okay, so, and it's more on the fixed income side then?
Well, or just private credit. Exactly, yeah.
Let's talk about the shifting sands when it comes to the demographics of the high net worth. I know you've been across patterns of seeing a rise in millennials who are hitting high net worth, Gen X.
Very much.
So talk to us about what's driving that change. What are you seeing?
So I think fundamentally, there's just two things happening. One is there's a massive wealth transfer that's just begun from parents to children. And so when you talk about that, that's a big part of it. Also, people are building their careers, starting to accumulate wealth. And I think the fundamental difference is that universe of investors is really focused on more of a self-directed bent. I think they understand that they need to be educated. I think they have a desire to understand what they're doing, but they're less likely to run to an advisor initially. I think they're more focused. Or what's interesting is about 60% of our customer base has an advisor. So they still have an advisor, but they have a self-directed bent as well. And we saw that happening at E-Trade over the years.
So it's kind of a hybrid approach, is what you're noticing.
It can be, or it's just purely self-directed, but it's also moving from self-directed to advised. And it's why we started building products. So we built a product called Willow 360. Think of it almost as the first robo-advisor for private markets. So it's managed by Wilshire, the underlying funds are Carlyle, Goldman, and Stepstone, and it has guardrails built on it in a way in which it's an easy access point to get exposure to private markets.
Okay, so I know our conversation is obviously about private markets and whatnot, but given your vantage point of seeing, what millennials, and I'm sure there are even some Gen Z who are coming up the ranks in terms of high net worth or ultra high net worth and that wealth transfer. What does interest look like in crypto now, given the volatility that's experienced?
Yeah, I mean, I think there's an interest in it. I think for us, rather than being focused on a particular coin or something like that, we would think about exposure more through sort of a fund structure.
Okay,
right?
like a wrapper.
Exactly, so that in the end of the day, it isn't, it's embedded, there's more diversification in that than there is in just a particular coin. And so, again, from our vantage point, we're really going after that customer who has somewhere between $500,000 and call it $8 or $9 million in liquid net worth. So they're definitely not in the ultra high net worth category, but they have enough investable dollars that they're thinking again about building a more diversified portfolio.
And then Mitch, let me ask you this final thought because of your experience leading companies. When you think about what we're seeing now with the geopolitical conflict, the war happening, oil prices above $100 a barrel, it feels very nerve-wracking. What's your overall advice to investors?
Yeah, I think at the end of the day, the single most important thing is stay the course. You have to step back and think, have you built a truly diversified portfolio? Will it achieve the goal you want over the long term? Doesn't mean that there shouldn't be some rebalancing, but ultimately, I saw this at E-Trade, the people who ultimately built the greatest wealth were people who were sort of steady to the course.
Thank you, Mitch. I appreciate it.
Pleasure.
Our pleasure as well. That's Mitch Kaplan. He is the CEO of Willow Wealth with a great resume to his credit. Coming up, time for Options Corner. We'll chart and trade HPE ahead of earnings. Those come after the close. Morning Movers will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, Powerful trading platforms and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab as everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow Scorvadis and connect with me on LinkedIn or Instagram for more.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back on Morning Movers. HPE set to report earnings after the close. Analysts are expecting earnings per share of 59 cents on an adjusted basis on revenue of more than $9.3 billion. Investors will look for growth in HPE's AI segment amid the AI infrastructure build-out. Now, keep in mind, shares of HP Enterprise have fallen 12% this year. Time now for Options Foreigner. Joining us now to take a deeper look at the chart is Rick Ducat, lead market technician. All right, Rick, take us through this chart. I talked about what it looks like year to date, but what trends do you notice on this chart?
Sure, HPE outperforming the tech sector and the S&P here. And this is a sector here where it's involved with the whole area of IT infrastructure and networking, et cetera here. So some of the main competitors would be Dell, Cisco Systems, NetApp, IBM, and a super microcomputer. So HPE near the top of the group here for this important and perhaps somewhat overlooked sector that would really the whole AI ecosystem depends on in many ways. So now when we look at our chart more specifically for HPE, we can see that our downward sloping trend has accelerated. Before we had these highs, 2644, connecting these subsequent high areas. Now we have a much sharper, steeper downward trend line in white here connecting these 2 points. However, we also have a very clear supportive area near 20. You can see that many times this was a point where prices bottomed out and then regrouped and rose once more here. Some notable high points right around here, 22 would be our relative highs, but beyond that, right around 24 and then 25 here, gap. High point once again, and then once our highs 2644. So if we were to consider some other studies here, we can see that our moving averages that we follow, our exponential moving averages, 5, 21, 63, 251, all grouped together, clumped very closely together between about 21 to 22 roughly. So this speaks to lack of trend directionality, of sideways consolidation here, of a weak momentum in one way or the other. So now we have, because everything is so clumped together near about 22, that gives us a very convenient confluence point to be on the lookout for a potential breakout. Meanwhile, RSI in the shorter term compressing in this triangular shape, perhaps a bit more of a downside bias here, but as we head into earnings, pretty common for momentum to wane here. So look for a breakout in the RSI that would correspond with our price activity. Volume nodes, we have one larger one here around 21. Then this area here, 22 to 23 about. Our point of control comes in up here near 24.
Okay, what's the approach you would take, Rick, for an example trade with earnings in front of us?
Sure. So thinking about what we have for our expected move here, we're going to focus on May. So 67 days out, our green box here, plus or minus about 19.5% here. So when we overlay our other studies on top of each other here, the area right around here, 20, was a repeated support point here, and then that's where we've tested so many times and bounced. A cash secured put came to mind here for an example trade. -1 May 15th, 20 strike, cash secured put at a 130 credit here. So selling a put, and bear in mind, this is different than just selling a naked put here. This would be if you were assigned, you would have enough cash to actually buy the shares here. So this would be a relatively lower risk type of trade here. Max profit 130, max loss 1870 if the stock were to go to zero here. So a neutral to bullish play, 67 days out here. Expected move, as I said, a little under 20%. Our break even, 1870 is 11% to the downside. So there's a bit of a cushion here. If the price stays above that break even, we keep the credit and we go on our way here. If we do face the situation where the price declines enough that we do take the assignment here, then we're able to purchase shares at a discount here. And this is the type of stock where the price is low enough that remains a bit more attractive for a retail trader, perhaps, Diane.
Thank you, Rick. Appreciate that example trade there. Speaking of prices, the price of crude oil continues to surge this morning, sitting above $102 a barrel for West Texas Intermediate. And so we've got the pressure on equities amid these rising crude oil prices. You've got S&P minis down more than 1%. NASDAQ 100 futures lower by 1.25%. Dow futures down more than 1% as well. Small cap futures look like we're in for a ride as well, down about 2% in the pre-market as investors look ready to hit the sell button once again. Crude oil jumping almost 13% today, although it hit as high as nearly $120 a barrel over the weekend. Thank you so much for joining us today on Morning Movers. I'm Diane King Hall. Download the Schwab Network app. It's available in the App Store, and tune in 24/7 on schwabnetwork.com. We've got Opening Bell with Nicole Petalides up next.
Interesting.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
That's low, but
Stay
That's
connected
enough,
to
and
what
then
moves markets. Download the Schwab Network
should be
app and
enough.
stream
Maybe I
live
should add
coverage
another.
wherever you are.
I don't know. I could put it on the side. Should I just put it on the side? Where should I put it? Yeah, let me see what I read about this. Test. Good.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by
Yeah, it's just a little side hustle. It
with
won't
an
be there
education
forever,
coach.
you know.
It's interactive learning at its finest. Tune in live or watch on demand. Head over to
Yeah,
schwab.com/coaching and start learning today.
Now I'm just doing a bunch of stuff. It's almost
Real-time
that time, 30
access,
minutes.
data-driven analysis from U.S. equities to
30
global
minutes.
macro matters. Schwab Network connects the dots. Watch live, subscribe free at
Schwab is where it's
schwabnetwork.com.
at. $3 with Schwab. Where's my widget? Where's my alert thing?
Good morning. Welcome to Opening
Yeah, it's
Bell right
right
here
there.
on Schwab Network. I'm Nicole Petalides. We have a big hour for you, of course, with the sell-off that has been underway. We're up off the lows of the overnight trade and also the big move in crude. As we see WTI hitting nearly $120
WTF
overnight.
about WTI,
Stock futures continue
wow.
to be on the downside after last week, which was the worst week since last April. We'll discuss the very latest news in the war in Iran and how that trickles out and what it means for your portfolio. We want to try and protect your portfolio during volatile times. Here's a look at the markets. We had seen
short oil.
that the Dow was much lower than where it is right now. The
Definitely
Dow Jones
short
Industrial
oil.
Average
Well,
down
now it's probably too
563
late.
points.
Well, no,
Gold was
now
down
all
nearly
the
1,000
noobs
points
are
overnight.
jumping on it.
S&P 500 futures
Or
at
not, the
66.72.
layman,
The
the
Nasdaq was
non-traders.
right now futures down 281.
What do they
Dow
call them,
futures
retail
down
traders?
557 points. All of those are 1%, slightly over 1%, and the Russell, the small caps, at 1.78%. This as the 10-year bond yield is at 4.18. By the way, the 10-year bond yield did hit 4.2. It has since pulled back. The U.S. dollar is continuing to show strength at 99.34. Gold, 5,100 a troy ounce. That is pulling back 1%. Oil at 101.71. That is up 12%. We'll do some explanation on WTI versus Brent
There we
as well.
go.
That's part of the
Yeah,
conversation.
sorry.
And
Way
Bitcoin here at
better.
68,000 and change. The VIX at 31.50, getting used to the 3 handle now.
Okay.
And we welcome in Alex Coffey.
Cute.
Nice to see you. Welcome back, Alex. It's great to see you, co-host of Next Gen Investing for our Belt Playbook. Alex.
Good morning, Nicole. Happy Monday. Yeah, I mean, the pre-bell playbook only has one play on it right now, and that's oil prices. Oil prices are dominating headlines. They're dominating the market action. You talked about the volatility in the Sunday overnight session, spiking up to near $120 a barrel in those near-term active month WTI
Spiking up or down?
futures.
No,
Still
drop it, yeah.
Over 10%, over
That's
$10,
the short that,
over
man, when I
100,
get money,
you got a
I'm gonna be
triple-digit
making
oil
money so
price.
many ways.
And all of it tied to the geopolitical tensions,
Duh,
the closure of the strait, or the mostly closed Strait of Hormuz, which of course is so
Closed for
critical to that oil transportation out of the Middle East. And as a result, you're going to see volatility in markets well beyond just oil, as the economy responds just to this tremendous supply shock of arguably the most important commodity on planet Earth.
Oh, without a doubt. I mean, this has been an incredible story. And how much oil will we have?
have, will the OPEC nations be producing more or less? Looks like less at the moment. We do have strategic reserves. Also, the trade that has happened. There has been some talk about WTI having some big short trades out there and then having to cover and pushing oil higher. And that's why you may not have seen the same volatility and or spread that we like to follow between Brent and WTI. So maybe crude oil, West Texas, went up a little bit more than what really is the truth because you had shorts covering that. That is one conversation. In the meantime, in no uncertain terms, it was below $70 a week ago. And now we are looking at it and seeing it at $100. And are we going to see 150 next or 50? You know, which way will it go? So the oil story is number one without a doubt. What are your thoughts on the fact that the VIX now has a 3 handle?
Yeah, building on all of these ideas and kind of getting to why the VIX has a 3 handle, I think is because of how quickly all of this has happened over the last week and a half, 2 weeks, Nicole. And it's not just the active month crude oil that's seen the tremendous volatility, which does go to show, and I think your point around whether or not this could be some short covering, speculative traders getting caught off sides on that rings true, but it's not just that, because you see it extending well beyond. You see crude oil out in June at 90. You see the August contract now at about $80 a barrel. So yeah, you're seeing near-term volatility that's even more excessive in crude oil on the shorter dated futures. But this does price as if this is going to have some sort of a medium-term lasting effect as we work through these supply shortages. You talked about some of the supply outputs being cut by some of those Middle East countries. They're doing that because they have nowhere to store the oil if they keep pumping it out at those same paces. So all of this happened so quickly and in many ways kind of a surprise. This wasn't in the models for how 2026 was going to go just a month ago. And so as a result, volatility for the equity market is repriced dramatically, and it's reflected by a VIX that's traded over 30 so far pre-market here on this Monday.
Yes, indeed. Well said. And so with the Strait of Hormuz basically stagnant at this point, right? We heard that phrase last week. If you try to bring your ships through, they will be set ablaze. It's 21 miles long. You can't actually close it, but you can be, generally very harmed or, decimated. And these ships are millions and millions and millions of dollars, and many of them are holding millions and millions of I could even say billions of crude and such. The value between the ships and the crude can really get up there. So that's where we stand at this point. We do have a lot of earnings coming out, some in retail like Dick's and Ulta later in the week. Dollar General, Kohl's will be on there, Oracle tomorrow, HPE today, and you're also looking at economic data. Tell us about that.
Yeah, you mentioned some of the earnings. I think Oracle and Adobe are going to be really, really critical this week. Just a few weeks ago, there was the huge software uncertainty around whether or not AI is replacing them. We'll find out when we get Oracle and Adobe earnings. And then it's a super busy week for economic data again, but it's really towards the back half of this week. You get CPI in the middle parts of this week, and then Friday, the 13th, is one of the busiest economic days that I can remember when it comes to the calendar. GDP. PCE with that personal income and spending number, you get a JOLTS figure, and you get University of Michigan sentiment. So a lot to explore throughout this week, and headlines out of the Middle East are certainly going to be the top of every list.
Mutual funds are typically
all right, Friday the 13th. Maybe that'll be a good luck day. Alex Coffey, great to see you. All right, let's continue our coverage here. Jenny Horn is with us, host of Next Gen Investing, and big news for HIMS. We thought for a while they were out, and now maybe some good news back in with another company.
I know. Frankly, I'm shocked. Following the story as closely as I have, Nicole, I'm shocked that we've seen some leeway given from Novo Nordisk, which was really the catalyst that set off a lot of alarms about Hims and Hers durability, and also just like their ability to frankly compete in a GLP-1 market that is no longer in a shortage. And so without that shortage, suddenly you see some of the holes in their business model. Now, some news we did get, at least as of this morning, is that, of course, after being embroiled in this lengthy battle with Novo Nordisk over their refusal to sell weight loss drugs on Hims & Hers platforms, the tides could finally be turning now back, hopefully, in Hims & Hers' favor. So we saw a huge rally this morning. I mean, shares surged as much as 50% plus off the news that Nova had agreed to sell its weight loss drugs through Hims platforms once again. So per Bloomberg, the partnership could be announced as soon as today. Hims does currently still sell compounded versions of the drug semaglutide, which is the same active ingredient that's found in Ozempic, Wegovy, which of course is Novo Nordisk's bread and butter at this point. But this does take advantage, though, of the legal framework that is right now allowing it to basically circumvent the FDA's approval for its products, because technically, while semaglutide in Wegovy, Ozempic is cleared by the FDA, it is not cleared in the compounded version that is known and very well marketed on Hims & Hers platforms. So Hims did cancel the launch of their semaglutide pill, which was back in February, as they had vowed to shell at a sharp discount to Novo Nordisk's own obesity medication. That same month, we did see Novo then hit them back with, right now, I mean, a lawsuit basically just focused on the fact that they were trying to duplicate their drugs, but labeling them differently, saying that these were knockoff versions that evade the FDA's gold standard review process. This is not also the only, federal level concern that they face. Last month, we did see the FDA's general counsel saying that the agency was referring Hims & Hers to the Justice Department over potential violations relating to the Food and Drug and Cosmetic Act. And so this is definitely, at least as far as right now, both of these names have been struggling. It seems like a truce, and that's huge, again, because Novo Nordisk's shares have also fallen 24% so far this year. And I mean, Hims & Hers looks even worse. This name's down 54% since just the start of 2026. It's definitely encouraging to see this huge move to the upside today, but a volatile name. So I do tend to say definitely risk defined, be risk aware when it comes to volatility swings that we've seen in Hims & Hers.
Common shareholders.
Yeah, I mean, it's unbelievable. I won't say it's a meme stock, but I mean, you have to be expecting some crazy volatility, 43% higher, as you noted, how much lower Hims had been, but a great move today here with this move. Let's talk about Live Nation and a settlement and up arrow there.
Yeah, so another company that is facing some degree of antitrust easing, and so another one where there's a legal framework that could benefit Live Nation here, as we did see that they've reached a settlement in this federal antitrust case that resolves the government's monopolization lawsuit against the company, thus sparing the fact that they could be basically facing the threat of having to divest Ticketmaster. It does not seem that will be the case, though, anymore. So the agreement, which does still need approval from a judge, is scheduled to be made public sometime today in the Manhattan federal court. That deal would make it easier for other promoters to compete for businesses at the amphitheaters and arenas that Live Nation does currently control, and would restrict the company's ability to use exclusive ticketing contracts at these venues. Also would speed up the length of some of these exclusivity contracts, so it would make it just seem more turnover, again, more competitive practices. About 10 states so far have agreed to this framework, but other states' attorneys generals are allegedly unlikely to settle here, and we could see some more separate litigation still continue. Like, for example, we saw the New York Attorney General saying that they will continue this case regardless of the path the DOJ takes. So mind you, it's not over yet, but definitely a nice lift, and it does feel like we are going to see, at least for the time being, the avoidance of a Ticketmaster sale, which is really the upside that we're seeing today reflected in share price, Nicole.
All right, Jenny Horn, great coverage, really appreciated. A good look at both of those names, Live Nation and Hims & Hers. Thank you. We'll see Jenny and Alex later on Next Gen Investing at 1 p.m. Eastern Time. Coming up, we'll get you ready for the trading day. So excited that James Demirich is here from Main Street Research to go through all the real movements, really dramatic movements over the last 48 hours and 1 week, to be honest. We'll be right back.
Probably gonna hop over to this and Yahoo Finance, but Yahoo Finance be lazy as fuck, cause Schwab and us, we've already been out here for an hour, y'all. But whatever, I digress. I gotta look that up though to like properly use it. I feel like I've been just using it from like movies and stuff. Yeah, right about. Cool. Form ADV2. Yeah, it's delivered. Before or at the time of entering into it. Yeah. Only if the client is brochure form, ADV part 2A.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings
The
to
insurance
volatility
clients
plays.
have
We bring
disclosure
decades
information before
of trading
committing to it. Yep.
experience to every segment.
With
Gotta know
real-time
what you're
insight
getting, what
across
you're buying.
products and sectors, we
Other
deliver
than
what active traders need to stay ahead. Fast
broker
Market
dealers.
weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane. And I'm his
with the
mom.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
I think it's just that. And with each state where they
Welcome
conduct
back to
business.
Opening Bell, getting you ready for the
Oh,
trading
I'm not
day.
supposed
We
to
saw
take
the
this
biggest
much
sell-off
time.
last week since last
SEC.
April. We've seen oil surge to nearly
Broker dealers must
$120
register
a barrel.
at the federal
fear
level with the
index is surging.
SEC
I mean,
using
this is
Form
some
BD,
morning for
become
breaking
FINRA
news.
members,
Watch
and
every
register
tick
with
this morning.
each state
Jim
where
Semmers
they
with me,
conduct
founder,
securities
CIO at
business.
Main
Damn.
Street Research, and I'm so
The
glad you're
CRD
here because
system
the market has
facilitates
obviously
filing in
had some
multiple jurisdictions.
extreme
Yeah, because it sounds like a
reactions,
mother.
and sometimes after a war, things go on and then you're back.
Alright,
But for right now, we're in the thick of it.
we're gonna be
Yeah, we are in the thick of it, Nicole, and I think we've
advisor
got a little panic
representatives.
going on. The amount of
So
selling
we're not
last
even
week,
gonna have to worry about
down
all that.
1,000 on Friday, and a couple
Even
days
if we
before
wanted
that,
to
we're
just be
opening up,
investment
down
advisors.
big here. And our message to investors is really don't panic. And that leads to a couple reasons.
Yeah,
One
my
is,
own firm, I still wouldn't open up a
as
broker
opposed
dealer.
to past conflicts in the
I'd
Mideast,
open up just
we
an
have a lot of
investment
allied
firm,
support.
and
And
I
I
ain't
think
gonna tell you
really
all my
important,
plans.
this is all about the
But
Strait
just
of
know,
Hormuz.
cooking.
Right? If we can get
A
safe
company has
travel
a
through the
stock
Strait
price
of
of
Hormuz,
50, EPS.
in our view, a lot of this stuff will reverse, and that's where I call the Republican put comes
What
in.
is
You know,
the
the Fed
key?
put. So we call this the Republican put. This is an election year, and we think they're going to do everything they can to make this a short affair, maybe even withdrawal sooner than people
Price of
expect,
50.
so that this doesn't turn into a big market decline and inflationary spiral.
So it's not that you're leaning one way or the other. It's just political play and theater,
Just
how
times
they need to be
10%,
set
what
up
is
for the
2.5
midterm
times
elections,
10%?
and not have gasoline at $4.
Yeah, they can't have
because
that.
you're going to have gasoline folks, at least in the near term, likely to be moving higher, right? I mean, that's not
Ratio?
unheard of when you see oil
It's
surging
probably
like
that
this.
divided
In
by
the meantime, you do believe that stocks are oversold, right?
Yeah,
divided
we've
by
already
20.
just reached
What is that,
the
2?
sort of initial oversold area,
Two?
and that's a measure of volume up and down.
Holy
and
shit,
that
we
tells
got
us
it.
when stocks have sort of gone through a lot of
First,
decline. You know, if you
calculate
think
P.
about
Yep.
it, the S&P is
Okay.
only down
Oh,
3% for the year,
kind
a
of went
little
the
more
other
at
way.
the open
P&E.
today.
Okay.
I wouldn't surprise us to see a 10% correction. That's sort of normal historically. Investors are not prepared for that. I think you see a little bit of panic coming in, but we would make a wish list here.
Oh, so what would a wish list entail? I mean, first
Well,
of all, how loaded up are you?
Didn't get it the right way, but we got it nonetheless. You just gotta pass the test,
Well, we've been
and then
thinking
you
it's a
learn
bull
on the way.
market, so we're fully invested going into this.
Right.
40% of it's outside the
Corporation
U.S.,
would most likely
60%
call
in.
its
As you
Right,
know, we're
right.
a global manager. So, you know, in our view, in our case, we don't have a lot of wiggle room to add, but I know a
preferred
lot of investors out there are not fully invested, and this is an exceptional window of opportunity. Maybe not today, but
They
over the
called
next
on 'em?
few weeks, which we think this probably won't have much more of an extent than that. You want to make sure you have that wish list.
Let's talk about telecom.
Well,
For
they
example,
have
that's one area that you have liked for a long time and still like, right?
I think
Names
it's
like
increased.
Yeah, we like the space.
Bit
You know, in the
bit
telecom space,
decreased.
you've got
Why is
companies
these
that
corporations
like Meta,
called
which have had
preferred stock
amazing
when
numbers.
interest rates
The stock's done
decline.
nothing for 4 or
But
5
they-
months. So I would consider that
And then
even
decline.
a value play. Google is actually in the
But
same
calling-
alphabet. in the same category in the telecom space. Again, a company that has done a lot in the last 4 months. Even though the earnings have gone up, the PE is compressed. So these are value plays now. I know that sounds weird as we got through the bubble conversation.
I mean, it's tech and telecom. We always used to say more techy would be the NVIDIA. A lot of these are the Mag 7 names. You have NVIDIA and Apple on there. Apple, by the way, got a cut today over at Citi. Let's talk about those names.
Yeah, we like Apple here. We think that the next generation is going to bring the real AI to Apple. We also like the fact that CapEx spending at Apple has been much more conservative, and that's why the stock has held up well. NVIDIA, again, a value play. The earnings a couple weeks ago, I think really show that. PE of 26, growing at 60% a year is a value play. And then don't forget to get your passport, as I like to say. Invest overseas. Taiwan Semi, another way to play that in ASML. And those foreign markets have corrected more than the U.S., so that makes them even more compelling.
Yeah, I saw actually the South Korean Kospi was halted again. You know, it had some violent moves in the last 1 week. It sold off and was down 12%, hit the circuit breakers. Then it was up. I think it was about 7 or 9%, and then sold off again. Now in the last 24 hours, hitting the circuit breakers to the downside. So people should expect some volatility. There's no way to really time the market. So in tech, you had Broadcom, Palantir, NVIDIA, and Apple, and then we moved to financials and energy.
A certified financial planner?
Yeah, there's been a big drawdown.
I just saw that earlier today.
And that's related to the
gotta have
potential
finance
for
all day, every
inflation,
day.
and maybe the Fed has to sort of
Along with
not
the
be able to
CFAs.
do much as far as
There's a
lowering
bunch.
rates. And we think that's a great opportunity. Again, if the Strait of Hormuz can be safely traveled, and we think that happens in the next 3 to 4 weeks, these stocks are going to get unleashed. So you want to go JP Morgan here in the United States, overseas HSBC or Barclays. All fabulous values at these prices.
I do want to get to healthcare and biotech, but I think Caterpillar and industrials is really interesting because a lot of people have really been hot on industrials overall.
Yeah, you know, it's been a trade that a lot of investors have felt like, I guess, have to chase the trade in cat. Because the stock's gone up
That's
like
for
crazy.
sure.
But here
Come
you have a
on,
12%
tips
pullback
for the
in a
net
great
worth.
name,
Come on,
better PE
and then I'll
ratio,
handle your
excellent entry
finances.
points. Again, the market can be sloppy here for a few
That's real
weeks,
talk.
but that would be on my wish list.
Like that's the goal for sure. I'm gonna pass this test, and then we gotta get me to 35, and then I can handle all your money.
There on oil, and they were wrong, and then they had to cover, and that was one of the reasons
Yeah,
why
rules
oil
adopted by
got to
most
nearly
state advisors with custody must maintain net
West
worth.
Texas and Brent. Normally you would
If
have a
they
bigger
have
spread, like
discretionary
$4 or $5,
authority
it was
but
much
not
closer,
custody,
it
the
was less than
requirement is
$2.
only
So
10.
maybe
Still
West
can't
Texas
make
comes
that.
down a little
We'll
bit.
just
That's
start
not
at
to
35.
say that West Texas
I'll
can't
turn-
go to $150
Sure,
a
everyone
barrel.
can be posted.
You know,
Ah.
particularly if Iraq and UAE continue with these
If all
cuts
else
that they've
fails,
started, the
we'll
Strait
start
of
at
Hormuz
35
is
though.
sort of left dead in the water for the moment.
Okay, which Treasury security provides protection?
Because that could pressure stocks greatly.
Yeah, it sure could, and it's also going to create an inflationary
You're supposed to read all the
spiral,
answers,
which
but
the
that one
administration doesn't want.
fires
So again,
off.
we need to get
Tips,
those oil
Treasury,
prices back down to a normal
inflation,
level.
protection,
And in our view,
securities,
you know, the
protected
panic trade on the
securities. We're
upside
probably gonna
is
buy a couple of
everybody
those
running
right
to
now.
stocks. And we would suggest
Wait,
to
let's
investors,
see.
don't chase
When
them. If the
inflation,
Strait gets open and
people
safely
don't even have
traveled,
jobs. They
those
ain't got no
stocks are gonna
money.
come back.
Nobody's
Now, are
buying
they good
nothing.
investments in the long run, maybe at a better price? Sure, absolutely. But we wouldn't chase them here.
You wouldn't be chasing energy. You also had healthcare. Johnson
What
and
is that
Johnson
called?
and some of the
A
biotech
recession?
stocks. Tell us about that.
Yeah, big fans of healthcare. You know, from a price, earnings,
Wow,
and growth rate
I'm taking the test. I
standpoint,
should
which
know
is what we
this.
do at Main Street.
Provide
We're looking at
direct
individual stocks from
inflation
around the world.
protection because the
AstraZeneca,
principle
Johnson &
adjusts
Johnson,
based on the
McKesson,
changes in
all
the consumer
trading at
price
low
index. That's
PEs
dope.
relative to their ability to grow
And
those earnings.
inflate.
It's been a neglected sector. Which we
principle
think is
adjusts,
of
that's
value.
cool.
And
As
in our
inflation
view,
rises,
artificial
principal
intelligence is alive and
increases
well,
and
and
interest is
may be
paid on the
even
adjusted
most productive
principal.
when
And maturity
pointed towards
investors
healthcare
receive
stocks.
greater
And I know you
of
run
the
a
adjusted
mentor
or
program and teaching kids too. What
That's
do you
sick.
tell the kids for their
Tips.
investment, you know, sort of thesis
That
of what
and
they should do
gold.
quickly?
Yeah, a lot of things we teach the kids. Thanks for touching on
Okay,
that.
that and
Academy
gold,
of
yeah,
Finance,
for
is
sure.
teaching them not to panic.
Gonna have like 3
Talking about the
sections, and
psychology,
then have
the
2 of
mindset
each
being a
section.
great
This is when we
investor
got paper.
is to stay
Like,
calm, stay cool,
which
and
of the
look at the
following is a
metrics.
leading
the
economic
boring
indicator?
can
Leading.
lead to exciting later.
Leading.
James
Keyword
Sarah, great
C,
to see you. Main
caps,
Street
leading.
Research, thank you so much. Nice to see you there. All right, folks, we're going to count you down to the
Building
start of
permits.
trading.
I remember
Ted
this
White,
one.
Seaport Securities is
Building
here with
permits
us.
are a
Of course, our
leading
team is
indicator
ready to
because
go,
they
go, go.
predict
We'll be right
future
back.
construction. Leading. Activity construction begins in months as permits are issued, and this is how you see. And this is future moves. This is dope. This is having that vision.
Morning trade live
Unemployment rate, CPI, and prime rate are all lagging indicators because it happens after. After they occur. Leading indicators help advisors anticipate economic changes before they happen. Sick. Developing towns and stuff. Yeah, that's how you. That's cool.
Whether you're an experienced investor
Commercial
or just
paper
getting
is
started,
typically not
Charles Schwab
sold
offers
to
a
which
webcast
type
that's
of
right for you.
commercial
Do
paper.
you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask
Individual
questions
retail
directly to an
investors.
education coach.
Yeah, commercial paper is a short-term debt instrument typically sold in high denominations, 100,000 plus, geez Louise, to institutional investors such as money market funds, pension funds, and corporate treasurers. Individual retail investors are generally excluded due to the high minimum. Yeah, of course. Yeah, broke boys can't. Yeah. Commercial paper, institutional investors. Now the 457B plan differs from from the 401k plan in that the 457B has lower.
All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching
It's
and more
only
time
available
learning.
to private sector employees, has a separate contribution limit, and a 10% early withdrawal penalty.
Welcome back to Opening Bell. We're getting you ready for the countdown to the start of trading in an environment that is pretty intense in that you have the VIX here above 30, and it really shows that the volatility is evident from oil to bond yields, the market selling off internationally as well. Sam Vadas is with me. I'm taking a look at the big picture as well here. Host
plans have separate contribution limit, allowing dual
So tell me your thoughts here this morning.
and do not have the early withdrawal penalty before
we saw those oil prices are crossing in
or
triple
the
digits.
government and
We are
certain
coming up and
nonprofit
running with
employees.
a lot of caution in these markets.
And certain nonprofit
looking at the international
employees.
session overnight, I mean, there was carnage. I mean, a really ugly session out in Asia.
Allowing
as we very
dual
much got these
contributions
fears back in
and
the spotlight as to,
non-LGBT.
more energy dependent
An investment advisor with
Japan, South
120
Korea. I mean, take a look at the
in
damage out in those countries
regulatory
overnight. I mean, we
must
saw
register
losses
with
in
the
the vicinity of over
SEC.
5%, as you can see here. So this is obviously looking across Asia and
And all
Europe
50
right now,
states.
currently
Okay, don't be
still
silly.
trading. Not as deep losses out in those markets
Advisors
right
with
now as we track
110
these
or
headlines.
more.
But just sticking
Yeah.
with the
Oh
Asian
man, that
session,
is
obviously a lot of attention
90's
on the cost
the
being
goal.
given. Of course, it's
I ain't even
worst
trying to
day
be
in history
all
last
pathetic.
week, and
Well,
we did
actually,
see the South Korean exchange issuing another
the
circuit breaker
7
overnight,
guru,
just given the
Series
heavy
7
selling
guru,
pressure as it got to about 8% down
Dean?
for the
Dean
cost
Kelly?
fee. So
The
obviously
homie.
a lot of damage.
He said that actually it's pretty cool to be federally backed. Like those guys live pretty cool lives. So we'll see. Like once we start rubbing elbows with homies like that, we'll see what the vibes are.
Into Hong Kong. So actually the performance in
Under the
Chinese
Investment
equities,
Advisory
suffice to
Act
say,
of
not as bad as we're seeing in other
1940, a person
parts of the
is an
world. We
investment
did get some
advisor
inflation
if they
numbers out
meet
of
all
China
the three
overnight. Now this
advise
ticked up
about
the CPI, those
the
sticker
business
prices to a
for
3-year high.
compensation.
Now obviously this is something that the world is watching out for
As
and
an
we all freak out
investment,
about
not
what these oil prices could mean for inflation.
compensation.
This is actually a good problem for China, and that is because, Nicole, they have been
facing deflationary
Are
pressures
registered,
for a number of years
provide
now.
advice
The big question is whether what we've seen
for
overnight
any
as far as that
purpose.
CPI
No,
print
no,
is
it's
going
for
to
conversation.
continue because we want to see sustainability in some of those numbers, given that,
ABC
of course, it
test.
is capturing a Lunar New Year holiday when we do typically start to see a bit of
Advice,
a pickup in that
business,
demand. So a
compensation.
good story for
That's
inflation
pretty good.
overnight in China, particularly when you look at the producer prices as well. Deflationary pressures coming off when you look at wholesale as
Yeah,
to
that's
what
pretty
is
good.
charged at
ABCs.
the factory gate.
Cool.
So it's been an interesting story for Chinese ADRs. If you take a look at the K-Web, for instance, this morning, outperforming once again.
Strategic,
This has been a little bit of a bright spot in what has otherwise been a down market. We saw those ADRs performing well on Friday. We continue to see some follow through off the back of the Asian session overnight. But we'll continue to keep tabs on things as well out in Europe, because the big story has been those yields, Nicole. I mean, you take a look at the 2, the 5, the 10-year gilt, all up in double digits. I think the 2-year gilt was up at 37 basis points. I mean, this is obviously short-term borrowing costs. So keep an eye on that. People have been talking about
as a
how this is a central
long-term
banker's nightmare with
policy-based
obviously what
approach
we're
that
dealing with. The
maintains
jobs
target
being
allocations.
obviously something to keep an eye on, like we got on Friday. Now with the inflationary pressures coming through, are we staring down the barrel of potentially stagflation?
Yeah, and so we think about the big picture here. We're looking here at
right.
home. We're looking
It's a long
internationally. I know you're doing some of the
process.
coverage here, what's going in and out of the S&P 500,
Some
but the
higher
international story.
tolerance, time
And I was talking
horizon
about
goals,
the spread between
tactical
Brent and
allocation,
West Texas.
short
Like, we
term.
don't
That's
necessarily
just what
see
you gotta
that.
know.
Some of your
Okay,
final
strategic, long, tactical,
Obviously,
short.
Brent is more exposed to the shipping channels as well. The big story for here as to why we're seeing the dollar up at 99.16 right now, Nicole, while we have triple-digit oil, is the fact that the U.S. is seen as relatively insulated from a lot of what we're seeing. I mean, China is another example of that out in Asia. It is the currencies and the countries that are way more exposed to, obviously,
we're about to open up.
the
Let's
energy
see. I
shock
think we got a
that is
couple
the big
questions.
question right now, and particularly markets that have acted as a big diversifier and has been
Important to
outperforming.
get
We are very much seeing
global
some
investment
fragility
performance
in some of those
standards.
outperformers.
Which
that we've
return
seen throughout the
calculation method? Return calculation method is. Oh, it's over. These motherfuckers go nuts. Let's get it. Let's get it.
And here we are. We are off right now. You're seeing the S&P 500 at 6681,
Put in the
losing
Gibbs
58
global
points here.
investment.
That's 9/10
which
of
return
1%.
calculation
Obviously, these numbers were much worse overnight, and we've at least come up off the bottom in the last 24
is
hours.
required
we could
for
say. The NASDAQ here, the
reporting most
tech-heavy
fund
NASDAQ is one to watch. The Dow is down 1%, and the Russell, the small caps, down 1.4%. The NASDAQ's losing 210 points here, losing 0.8% of 1% at 24,430.
If it's the fund performance,
You know, we
it's
were
got to be
also
the
looking
big
at some of the
picture
upgrades
long.
and downgrades today. We
all
had
the way,
GE
holding
Vernova,
period,
Zion, Verizon, Brinker, Dow Chemical. Those were some of the names that had upgrades today. On the downgrade circuit, we saw Starbucks, also price target cut on Apple today. But you did have James Demert here a short time ago who says he's fully invested, 40% in international, 60%
time
here in
weighted.
the USA, and still saying that
there we
markets
go.
are pretty much
Yeah,
oversold. But gotta
require
wait to
time
see what
weighted
happens with the
returns
Strait
for
of
reporting
Hormuz
most fund
and
performance
oil
because
and
it
such.
eliminates the
short-term
effective
pain,
cash
and that
flows
the
that
playbook would be
managers
that
cannot
it
control.
ends, and then you get to
Allowing
the summer
fair
midterm
comparisons between managers. Yeah, good shit. Time weighted is managers, and then money weighted is the investor.
422 points. Looking
Or, oh shit, was that dollar? No, that's dollar weighted. Or money
It's a
weighted.
double upgrade here this morning, so serious conviction around this
Hopefully
one. This
that's
is
just
from
wording.
Rothschild & Co.
Money weighted returns are
Redburn,
required
who's
only
upgrading
for a
it to
certain
buy. They're
asset
raising their
class
price
like
target by
private
a large
equity.
amount, raising
Oh,
it to
it had nothing to
1,100.
do
That's
with the.
about double what their price target was previously. Their
There we
previous
go.
price target was 560
Still got it.
for this one. And
Financial risk is
Vernova,
primarily
the shares are not
associated
necessarily
with
responding at the moment, but you have to take into account the kind of day that we're having with all the volatility in the market and the downdraft overall for risk appetite. And GE Vernova has already had a massive run so far this year. Here's the thing for Rothschild Redburn. They say surging demand for electricity tied to AI data centers is the tailwind for here, driving a stronger outlook for gas turbines, one of GE Vernova's core businesses here.
Yeah, financial risk arises when a company uses this leverage in companies that have higher financial risk because they
prior
Might fuck
forecast
up.
for this sector. The firm also lifting its
They
2028
must make
profit
interest
outlook
payments
sharply. They say
regardless of
margins in the power
profitability,
segment
increasing the risk of the
could
financial
exceed
distress
30%.
or
And
bankruptcy.
keep in
And this is
mind, shares have rallied again. Big so far this year into today. Again, today the response in the market is lukewarm. Actually, it's turned positive. It started out
this
under
is
a
an
little bit of pressure, but now up a
unsystematic
little bit more than
risk
a half
that can be
of a percent right now. AI again driving the surging power demand here, and the gas
private fund
turbine market
advisor
growing faster than
exemption
expected,
is
Nicole. All right,
available to advisors who provide only
energy.
private funds and
In the
have less
meantime,
than
I think it's worth noting that oil
advisor
has now come
exemption.
down below
Advisor
$100 a barrel.
advise any
Overnight,
type
it was
of fund
above
with less.
$119 for West Texas. It has since come down.
Private
Part of
fund
that was some
advisor.
short covering, I believe, on some
Private
trades where
fund.
people thought it was going down and it was going up, and they got caught on the wrong side of the trade. In the meantime, we'll get to Oracle. Huge news this week for Oracle and some price target moves.
Yes, that's right. We've got
Exemption.
Barclays, who is out with an
Lesser
adjustment
than
to its price target on
15,
Oracle.
regardless
They've
of fund
trimmed it.
type.
They've trimmed it to 230 from 310. They warned that the company is
Podge.
accelerating
Advise
push
only
into
private
AI
funds
could
and
weigh on
have
margins
less
in the near term. So this is a near-term margin pressure story here. They say
Private
that
fund advisor
AI-driven
exemption
revenue
applies
growth
to
should pick up
advisors who
meaningfully
advise
in the
only
current quarter as
private
cloud capacity
funds,
comes
3C1 or
online, with
3C7
revenue coming in
funds, and
potentially
have
ahead of
less than
expectations. We've got
150
earnings in
million
front of
in
us for Oracle.
regulatory
So it's a
assets
price
under
target cut, but it's
management
not
in the
a
United
downgrade
States.
right here. They're still
That's a
maintaining an
lot.
overweight rating on Oracle.
And you just gotta
so they are
memorize
still
that one.
bullish
Okay,
on
you
this,
just
but
gotta
they're adjusting
burn
where
that
they
one
see
in.
the price and where they think it
Private
needs to
fund
be.
exemption.
There is some pressure on Oracle as a result. That stock is down more than 3% at
private
the moment.
funds.
But they do expect
Less than
AI-driven
150.
growth to accelerate. But again, part of this is a
In the
timing
US.
issue, and if there is
That's
a
actually
trade-off
pretty
here, that
straightforward.
you can expect to see
They just
margin pressure
made it a little barbells.
because of that ramp
The primary
up
difference
in,
between
focus
the
there,
security
Nicole.
market
Oracle
line,
on Tuesday, Adobe on
SML, and
Thursday, and
capital
many
market
others to
line,
watch. And
CML is
Micron in your
at
sights.
the
Yeah, Micron's
security
got some
market
analyst activity
line
around this. A couple
is
analysts moves around Micron. Shares are under some pressure, but it has a big price target boost here. Susquehanna raising its price target on Micron to 525 from 345. So they're kind of playing catch up in the sense that the stock price has already exceeded that, but they've gone beyond that. The view is that there is
as a
room to
risk
run here.
measure.
They're keeping an upbeat rating ahead of Micron's earnings. It reflects stronger pricing trends in memory chips,
at the market.
particularly for
No,
DRAM
use a standard
and
deviation.
NAND, which is running above earlier expectations. So they think that there's an improving supply-demand dynamics across memory
Damn,
markets
I
and
should
support
have
higher
reread them
estimates
because
there.
that made
It's a
more
big story
sense.
for
Even
Micron. There is the memory prices.
Okay,
and
uses
those
beta
have been surging. It
systematic
certainly bodes
risk.
well for Micron and others in the space because
Okay, as a
Susquehanna
risk
was looking
measure,
out broadly
comply to
across
any
the space. It's not the only one, but Micron stands out there. So
standard
another analyst,
deviation,
Citi,
total
also
risk.
raising its price target for Micron. They're raising their price target to 430. So not the same level,
Damn
but
it.
they certainly have
And
some bullish
only
conviction
class
there.
division
They expect
portfolios
Micron
both
shares
lines
to
start at
continue
the
to gain
risk-free
ground
rate
this
on
year.
the
The key
market.
question
Okay.
will be
Results.
whether Micron can maintain
Let's go.
strong margins, Nicole.
All right, Diane King
That's
Hall,
good.
great to see you.
72.
And folks, there's
That's
plenty
passing. I'm
of
pretty
green sort of
goddamn
popping
sure.
up here from Pfizer to Lilly,
I mean, it was
Raytheon,
25, but hey,
Boeing,
let's
CME,
go.
ICE, now,
Oh, that's good.
ServiceNow, Intuit,
All right.
Palantir, all the energy
Cool.
stocks here. A lot to watch here. I mean,
Well,
names
that
like
was that.
Exxon is higher.
Let's see.
So you are seeing some green on the
In
screen
here
here. It is
for an
hardly
hour.
a huge sell-off.
Let's actually
or,
check.
you know, sometimes we say a 90% down day or
Yeah,
all down.
let's
And
check
so
how
while the
this-
sectors may seem
going.
like they're all down at the moment, you are seeing energy obviously helps, but Live Nation, Dow Chemical,
personal
Moderna,
stuff,
Corning, Coinbase, AppLovin, Western Dig, all with up arrows. So let's wait and see what happens here next. The 10-year bond yield at 4.15 and the VIX at 30.98. Coming up, Seaport Securities, Ted Weisberg is standing by. His theme for the market, his stock picks. We'll be right back.
Oh, actually, I can turn this off now if we're not gonna be doing that. Cool. Alright, that was cool. Our first little part of that. I take it away. Cool. Futures. Oh, what does he say? Oh, future. Man, what does he say? Incredible. Black. Delicious. I don't know. It's in all the memes and shit. Stupendous. Oh, we did pretty good. Was that 30 minutes?
While others recap the news, I help you
All
read
right,
between the
let's
lines from
do
what's
some
moving
trades
markets
real
to what's
quick,
next.
and
With sharp takes
then
and market
we're gonna check
know-how.
out of here
Follow
because
me
we
on
got
all
other
social media
segments to
platforms
do.
Diane King Hall.
You know
And
what's
connect
up?
with me
This is
on
gonna be our
LinkedIn for
first
more.
week of real structure too. So we got finance with Reezuhn in the morning. We're gonna show you all the pre-markets, and then 30 minutes or so into market. Make all your moves like early in the morning, like like hitters actually do. And then we're probably gonna come in with move with Reezuhn, chess, and all that. What time is it? Yeah, it's still early though. Take a break. Move with Reezuhn will be next. Then listen to Reezuhn, more reactions and all that. Then debate with Reezuhn, and then we'll have laugh with
Live
Reezuhn.
insights,
And
actionable
that'll
data,
be the
and
open
market-moving
mic late
analysis.
night caps
Schwab
and all
Network
that.
connects the headlines to the why
Yeah, but
in
that's
real time. Watch
yeah,
free
that's that. That's all
24/7
coming
at
this week.
schwabnetwork.com.
We'll either have it as segments, nightly segments, or each show on its own night. Weekends off for editing, family,
Down with the heaviest losses here, down 1.3%
focus.
of the three indices,
But yeah, look out for it.
628 points
It'll be safe.
lower. Some of the big names to the
how this shit's
downside, I think it's worth noting. Carnival,
improving.
Royal Caribbean, this as oil is higher. I mean, it makes so much sense to see anything in the transportation index. Also, Estee Lauder and Best Buy are some of the other names, Stanley Black & Decker. I do have with me right now to make some sense, or at least sort of get us through the volatility of the day, Ted Weisberg, founder,
And we put
president,
200
Seaport Securities.
200 in the bank
We've seen
yesterday,
so many
so
ups and downs. We've seen so
gotta
many
start making the dance.
moments in history
Bands
where
will make
we've
the
had some
dance,
volatility.
but
I don't know
200
that
will
this
make me
necessarily
fucking-
compares, but the oil was a big move. Teddy, your thoughts this
Make
morning?
me river
Yes,
dance.
oil is the big move. I mean, this is, I thought maybe I had seen the worst of these near-death experiences in the stock market, having started in 73, 74, crashed of 87,
a little,
08, 09, so forth and so on. I was hoping not
Sorry,
to have to live
I'm
through
gonna
another
clean
one,
my
but
ear.
here we are.
I don't
Would you
care.
equate it to the same? It's not the
Oh
same,
man,
is it?
it's,
Well, no,
when I
it's
wear
never
these
quite
headphones,
the
I
same,
swear
but
it's
the
all.
one thing you learn
Hopefully
from these
everybody
events, number one, you don't
feels
know
me
how
on
long it's
that.
going
Well,
to take
I
to
don't
work
want you to
stuff out.
feel it, but like,
And number two,
understand.
perhaps sometimes the best thing to do when it gets
Hopefully
like
you
this
get
is
by it
not
somehow.
try to be a hero, not look to pick bottoms, try not to catch a falling knife because that can get very, very expensive, but basically just to push yourself to the sidelines. If you have an opportunity to lighten up a little bit, probably a good idea. You can always replace those holdings later on.
Well, yeah, you
but
gotta
this
lighten
is
up
a
in
time
life.
to
You
kind
don't
of
wanna be serious all
step
the time.
aside and let things just play out.
What kind of lightening up would you do here? In what sectors or how so?
Well, to me,
What is this
the
guy
very
doing?
obvious trade, and you just referred to it with the cruise lines, it's anything
Doesn't give you
energy
the whole
related.
day.
I mean, the paired
Need more
trade, which to me is
information.
ideal, is long energy and short the airlines. Well, if you're not short the airlines and you own them, perhaps you want to lighten up, and because
high
clearly
951.
they are to me the
We've only been
sector
open
that's
for
most closely
damn
related
10
to energy.
minutes,
There was a
11
time that
minutes.
you liked airlines,
I'm
and then
very
they took
impatient.
off, no pun intended. When
you
does
are
that
stalking.
group become maybe a buying opportunity again?
Well, I like them, and I still like them. In fact, I don't want to say we love them, but we like the airlines.
That's what I thought.
We like the fundamentals. Clearly, they are in the absolute wrong place to be in the current environment.
Yeah.
But herein lies an opportunity. So the trade would be, if you could figure it out, is basically to sell the energy when we think it's peaked, and basically to buy the airlines.
There was also a time that you said to me, Nicole, I really like
keep
the
doing that. That's
exchanges.
annoying.
And then the exchanges took off. And today I was seeing ICE higher. How do you feel about that group?
Well, which reminds me, if I can tell a quick story about 1999 and 2000, and that's when the world was going to be completely changed by the internet. And I remember in 1999 and 2000 saying to my people that work at Seaport, you know what, we need to find stocks that aren't going to be impacted by the internet. So we ended up buying railroads, Norfolk and Southern, Union Pacific. We bought Waste Management because we're not running out of garbage. And here we are 25 years later, and basically we're dealing with the same scenario, but now instead of the internet, it's AI. So we're looking for stocks that aren't going to be impacted by AI necessarily. And it brings us right back to the rails and to garbage. And interesting, I heard some fellow on TV the other day recommending Norfolk and Southern. And when he got all done, he said, and Norfolk and Southern isn't going to be impacted by AI. So the more things change, the more they remain the same. Here we are 25 years later, and we're looking for sectors that aren't going to be impacted by something that's taking place in the background.
And you had waste management on there. In fact, waste management is at a new 52-week high in the last week. It's had an incredible run just since November from 194 to nearly 250, 248 was the high. Where do you think this kind of name could go? In 1 year, it's up 8%. Where do you think it could be headed?
Well, I think if we connect the dots back to 1999 and 2000, and here we are 25 years later, we're going to reconnect those dots. We're looking at sectors that basically are going to be unaffected to a large degree by AI. And it takes you to garbage, it takes you to the rails, but it takes you to master limited partnerships in the pipeline business. Last week and the week before, a lot of these MLPs were all making new highs. These are sectors that basically
I'm gonna wait on that one. I'm gonna wait till after the.
out of the bird's eye view, if you will, of this AI trade or the negative part of the AI trade.
One of your winners was Chubb. You always pick Chubb. I think Travelers was on there. Some of these insurance stocks have done well. Meta was a name that you've loved, and over the long haul, you've done incredibly well. Meta, one of the Mag 7 names that has been hit pretty hard. 6 months down, 16%. Where do you think Meta's? Do you just hold on? Do you add position here?
Well, if I didn't own it, I would look to buy it. We do own it, obviously, and we've owned it for 10 years. I don't want to keep talking about that stock. And, it's been a great stock.
No, but people want to know what to do now.
Yeah, well, if we're not doing anything with the Meta position, and if we didn't own it, we would look to buy it. I mean, that's the short answer to
What about the other Mag 7 names?
The other one that really is intriguing and it's coming down is Google. I think Google, Google, YouTube, but there are plenty of avenues, even some of these software companies that have been basically destroyed.
Do you like
I suspect they're not
going rising above overnight.
We owned them. We got out of them.
Yeah, it's all over the place. God damn, I don't even think a short's a good idea. You can get, you can get.
Adobe's reporting this week.
Yes.
Would
you can sell yourself short.
Or wait and see?
No, we never buy any stock prior to the earnings.
Oh yeah, it's right there.
It's
it's
tough
locked
enough
in. It's
finding the right names. Why gamble on the earnings? I mean, you got a 50-50 chance of being right. I would say I'd rather pay up because the report was good than guess and be wrong.
Do you think oil's going higher or lower in the near term quickly?
I think oil's going higher and the airlines will go lower, but therein lies a great potential trade.
Ted Weisberg, the man, the myth, the legend. He's been here through all those moves. We appreciate it. Thank you, Ted Weisberg, Seaport Securities. Now let's talk to Rick Buchanan,
looks as a feller that would hold that
action here on Wall Street. Right now, I see the S&P 500 is down 1.38%. Rick, good morning.
Yeah, good morning, Nicole. And we're talking about USO this morning, the United States Oil Fund. I got to say, I checked futures last night, Sunday evening. At one point, crude oil futures were up 27% when I checked. My eyes popped out of my head almost. This is extreme, price activity here. You can see USO just kind of skyrocketing above the energy sector, XLE, as well as the broader market here. So when we do look here at kind of all our energy futures, our yellow vertical line here, obviously when the war in Iran began, so you can see just kind of across the board, very sharp increases here. The Strait of Hormuz is essentially closed right now, one of the most critical choke points in the world and vital for oil and this whole industry here. So it's certainly, we're starting off this week with quite a bang here so far. When we do look at our price activity for USO, it's kind of a lot to make sense of here. The best we can do for right now is just identify identify these gap levels. Gaps are often places to which price retreats and stabilizes, or it can be a breakdown point for planning a, some kind of long put trade or something like that. It just depends on your outlook. So what we can look at here today, our highs 119.49. At the time I was looking earlier, we had lows around 117. But our next high point here, right around 110. Right here near about 104.50, and here 98.83 roughly. So kind of just this would be the first step of trying to analyze where you might look for potential support in this particular name. So when we do look at our moving averages here, they've been left in the dust, as is often the case when you have these explosive price moves. But the one to watch out for will be our 5-day weekly EMA here in dark blue, coming in right around 104 right now, lining up with our trend line. This will be the one that reacts the fastest and keeps up the best with price activity. So look for any notable breaks below that moving average, or for that moving average to start sloping downward. That could be a sign of a pullback. And even when we have these sharp rallies, the pullback can be vicious. It can be a very quick turnaround here. So stay nimble if you're planning on making any trades in this particular area right now due to the extreme situation. RSI quite high as well, 91.90, one of the highest readings on the RSI I've seen in quite a while here. RSI only goes to 100. It can't go any higher than 100. That's the maximum value. So these are very, very high readings on the RSI. You could start looking for bearish divergence where things start to go the other way from price. We have a mismatch between price and momentum for signs of potential slowdown. Finally, volume profile. Not really much to say in the near term here.
This shit's pissing me off.
Major
I don't know why it
activity
keeps
around
jumping
80. You
back
can
and
see the
forth
very,
like
very
this.
large volume spikes, the very heavy trading activity in this name that we've seen recently. And remember, the highs in an event like this can be much more disorderly than the lows. The prices can be very extreme. It can be anyone's guess where things wind up to the upside.
All right. That was excellent, Rick Ducat. I really enjoyed that. I'm glad you brought the RSI to our attention. The stay nimble phrase is reminiscent of my good friend Art Cashin here, who used to be the head of UBS floor trading. He always wrote in his daily notes, stay nimble, particularly on a day like today, as you noted, with disorderly trades, violent trades. You used some good language there, which I also appreciated. It sort of really encapsulates what's going on here. Rick Ducat, thank you. Coming up next here, we're going to have a great conversation with our meetup panel talking all about this market action. So stay with us. Just a very quick break. Opening bell. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context, from inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Opening Bell. Right now, we're seeing the Dow Jones Industrial Average down 722 points. So we have taken a lag down, and now we are at session lows with the 10-year bond yield sitting at 4.16. And welcome back, Jenny Horn, here for this conversation. Some of your early impressions in this market action. We're just a few minutes into the trade.
Yeah, I will say that as far as the overall, market activity today, Nicole, I will say surprising that we're not seeing maybe more of a reaction to some of the over the weekend news, but I will say a slew of red across the board, and dominated by your big tech forces. You are seeing pretty much paying across NVIDIA, Microsoft, Alphabet, Apple. All these major tech names. Actually, Broadcom, a surprising winner, with really the pockets of strength being felt in some of these energy equities, as well as just names like Eli Lilly, Novo Nordisk, of course, Hims and Hers, all tied to that hopefully truce between Novo Nordisk and Hims and Hers. But I think what's been a really interesting trade to watch over the last several weeks is like the areas that seemingly are completely avoidant of any risk from the headlines. Like Bitcoin had a really solid week last week, despite, again, that there are still major macro pressures at hand. We also know that Bitcoin right now hopefully seeing some stabilization after weekend volatility, again, tied to the Middle East and the influx in oil prices. But we've actually seen the collective strength from gold and Bitcoin, which typically feels like they trade in a bit of an inverse. So that's been interesting to see, again, the pockets where we're seeing this dip buying and this appetite for more of this risk-off type behavior. Not to say that that's been Bitcoin for the last, several years, but encouraging. We're also seeing a nice way to start off this week and going off of what was a pretty strong, pretty resilient last week, of course, for the broader asset class.
As we continue to talk about oil and the markets and some of the gyrations we're seeing in the selling abroad and internationally, I mean, we are getting sort of news on all sides. At the same time, Jensen Huang and Sam Altman are still all about AI. In fact, Sam Altman, the CEO of OpenAI, actually went to X and expressed his gratitude to Jensen Huang for, in fact, boosting the computing resources that are needed to power OpenAI's rapidly expanding AI systems. It's so funny how they're just in this AI frenzy world. And, you read some of these headlines, Alex Coffey, we bring back Alex Coffey, and, some of your thoughts on the action.
Yeah, I'm not surprised, Nicole, that we're working our way down here a little bit, especially early in the day as de-risking takes place at the market open here in the U.S. But I wouldn't be surprised if you see a little bit of stabilization. Doesn't mean that we're out of the woods, but you start, piecing together multiple percent moves over and over again. It just doesn't become sustainable. Now, the big risk would be that you see something that starts to develop that looks like, March and April of last year, where, you did see the market unwind dramatically in a short amount of time, but just as quickly as it went down, it turned around. So a lot of red on the screen today. I'm not surprised by that. We talked about this at the top of your show, Nicole. Headlines out of the Middle East, headlines regarding oil, and most importantly, just the actual price movement of oil is what's driving the volatility here today across all asset classes. So if you do start to see some of that trade moderate, you could see a stabilization across equities, across things like Bitcoin, and perhaps even gold as well.
Yeah, and we didn't even touch on the jobs report from last Friday. I mean, we sort of almost forgot about it. Final thoughts here, Jenny.
Yeah, I mean, it was obviously a disappointing headline number, and we also seen, not only are we seeing an unemployment tick up, we're seeing, obviously job losses that were well below or beyond what the street had been expecting, which was the concern, but also, if you look at some of the revised numbers, I do feel like there's less and less weight of these reports because we've seen a more frequent cadence of some of these numbers getting completely changed once we get like the full scope of that data. And I will say, to your point about NVIDIA, what I like about NVIDIA is there's always catalysts in that name. And so even though there's obviously a ton going on from a news standpoint, GTC 2026 is expected to kick off on March 19th through the 16th, through the 19th. And so that's coming next week. And so that will at least hopefully give a potential catalyst for generative AI and all of the new tech expected to be unveiled, of course, in the next coming year.
All right. Well, oil's been at the highest since 2022. The VIX and stocks sold off. Stocks sold off, biggest sell-off last week since last April. VIX at the highest since April. Stay nimble, folks. Jenny Horn, Alex Coffey, thank you. I'm Nicole Petalides. Keep it right here. Morning Trade Live is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by JD.
Uh-oh. Oh, that happened. Sorry about that. That was awkward.
Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Oh, I said I'd wait. I'm jumping ahead of myself.
Welcome to Schwab Network, where
Yeah, I'm gonna
real-time
take a break.
market coverage meets expert strategy.
Yeah, we'll
From
make
the
these
opening
trades,
bell to the
in a
closing
moment.
bell,
All right,
we've
still
got
good,
you
though.
covered.
Still good.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were.
Yeah,
Schwab has been with us for almost 25 years through purchasing of
take a break
houses,
and then
opening up our business, having
we'll come
children.
back.
They've always been there for us.
I want to invest
Got
with
the first
a
30
company
minutes
that can help me
down.
give my family
Gonna
a
charge
happy
through.
financial future.
How long have we been
Stay
on, actually?
connected
Yeah,
to
we're
what moves the
pushing.
markets.
Oh, actually, we
Download
might
the
just
Schwab
hop
Network
off. We've
app
been on
and
for
stream
what?
anytime wherever you
Sorry,
are.
we've been on for an hour and 30. Yeah, I think we're just gonna call it. Yeah, we're gonna call it. And then, wait. Yeah, I'm gonna make these trades, off the line. Off live. Alright, cool. Well, thanks for everybody that stopped by. This is our first Finance with Reason. Gonna be doing this every weekday, keeping y'all updated on stocks and all the money moves, as well as my journey on becoming a investment advisor representative. And so I'm actually gonna be, the guy to come to with all this, and it's actually all gonna make sense in the long run, and we're gonna be making that paper.
Hello, everybody, and welcome to Morning Trade Live. I'm Sam Bardis, live from the floor of the New York Stock Exchange. We have
As
plenty
always,
to hit on both here and abroad
listen
over
to
the next hour.
Reason.
What a morning! So here is look at coming up on
Finance with Reason now, Move with Reason. It's going to be coming up. And then Laugh with Reason will be the, Debate Reason, and then Laugh Reason. That's going to be the two big ones I'm looking forward to. Debate's like intense, and then Laugh will be cool. Laid back. Depending on how the caps go, though, that shit could get heated. Alright.
So let's take a look at where things